Good morning. This is Ryan with Advisory World. Today we're going to go over Market Scope Advisor, CFRA, and Scanalytics integration within that program. On the screen right now, you'll see that I've logged in and I'm at the CFRA Market Scope Advisor home screen. In order to get into Scanalytics, there are actually two ways you can do that. You can hit the portfolio analysis once that's enabled for a client, and it will take that person to our main page. Standalone program has a page that's exactly like this. Essentially what this is an embedded version, an iframe version of our full program, customized for CFRA use. You'll see that there are portfolios in here already. These are mostly testing portfolios. There's another thing that I like to talk about as well as an entryway into the program, and that's through Watchlist. I have a test watch list right here. Any watch list will do. What I can do right here is I see run hypothetical, and it will take me back to portfolio analysis, only this time it will give me, I can view a quick hypothetical report with default settings for the assets within the watch list. I can add investments to a new detailed hypothetical, essentially starting a new one, or I can add investments to an existing detailed hypothetical. That's one that would already be on that saved list. So we'll go ahead and choose option B and start a new hypothetical here, and I'll go through and show you some things about that. You'll notice that we have the assets that were in that portfolio right here in 1.3. If you were to manually add another asset like Facebook, click Find, click Add. It should show up down here in 1.3. In 1.4 is the default naming structure, illustration 223. Usually it's illustration N+1. In this case, the next one that would be started would be illustration 224. We can do test portfolio 1012 and hit next. Anytime you hit next or back in this system, it will automatically save. You can also hit tabs across the top once all information is populated. And if there's information has been changed on that page, it will ask you to save it. If information has not been changed, it will go ahead and just take you to that tab. You'll notice that right now these three tabs are grayed out. That's because we haven't necessarily filled in that information just yet. Now, because it's a watch list, there were no integration values that came over. So we'll give these guys a real quick allocation. I try to do for tests, make sure everybody has slightly different ones. And then this one has 10. All right. One of the things that we have to make sure of in order to run analytics in this program, section 2.1, portfolio of investments must be checked. That turns on essentially all of the analytic calculations. You'll notice that reinvesting dividends and capital gains is available down here at the bottom. For example, if I wanted to take cash for Apple dividends, I would just simply uncheck that box. Default settings for the system. Standard time horizon is common asset inception date. That is the date in which all assets in the portfolio became active, in this case 12/16/2015. But we also have choices for common share class inception or common share class and index inception. This would be the benchmark associated with the asset. And so the youngest benchmark in the system, I should say, is 9/30/1998, essentially exactly 20 years ago. You can run a custom time horizon for any date in between 9/30/1998 and today, but essentially this particular portfolio can only go back 20 years. It happens to be exactly right now because today is October 12, 2018. But essentially what we're dealing with as far as time horizon is that for every asset in the system, there is a benchmark associated with it. For example, Apple and Facebook have Lipper large cap growth as their benchmark. One of the benchmarks starts 9/30/1998 for this particular portfolio. And then rebalancing, we can do quarterly, semi-annually, or annually. That will take us back to the percentages entered above in section 2.3. If we have any fees, we can enter those right now. We'll deselect all of the apply advisory fees. There's a waterfall under the My Info area that you can fill out. If this box is checked, that waterfall will apply. But most of our clients will utilize the wrap fee. A quick way to do that, hit apply global settings. Let's say, for example, we want a 1% annual fee billed out quarterly. We would put 0.25% quarterly. We could put any front-end loads if we'd like, or we can choose not to enter this information below. If we hit apply, you'll see that it fills out everything above. The number 4 tab is our historical cash flows tab. For example, let's say there was a $50,000 home modeling, a home remodeling loan or withdrawal in 2012 that you wanted to notate. You can notate that here using new cash flow. Conversely, you could also put in, what would happen if we invested $1,000 per month for a year versus, $10,000 at one time. Is there a massive difference between that? But essentially, any cash flow that occurred before today could be entered in this particular area. And now we'll go to the reporting tab. And there's a couple different things that for CFRA to pay attention to here. The investment reports, if this is checked, that is essentially a CFRA report that has been customized for our output. It has what I would consider CFRA S&P fact sheets attached into it, and then it pulls some information that would be found in some of our other reports, but in a fashion that's more closely linked up with what CFRA's output is for their clients. However, for our purposes today, we'll go with a holding scan. This is our most popular report. You can choose pie chart grouping by subcategory or category. I typically will utilize subcategory. You can also select or edit the benchmark for the portfolio as a whole. Weighted asset class benchmark is the default in most instances. That takes the benchmark, for example, Lipper large cap growth tied to Apple, and uses that in the same weighted average as the portfolio. So for example, if Apple is 20%, of a portfolio, then the weighted asset class benchmark will have 20% of the Lipper large cap growth as that weighted asset class benchmark. If that's not what you want to do, you can set up your own benchmark by hitting new blended benchmark right here and making a 60-40 or an 80-20 that you would like. The nice thing about this is any benchmark that is saved here will show up anytime you hit the benchmarks for future portfolios. So essentially, the blended benchmarks only need to be set once, but they do need to be selected for each individual portfolio as it's chosen. And we'll build a report real quick, and we'll go through the output here. You'll see that there are ways to apply taxes above. You can do the same with fees and out-of-pocket or sale of shares. In the number 3 tab, you might have noticed that there was a fee source in there. You can choose out-of-pocket, which will show the amount of fees, or you can choose sale of shares, which will essentially prorate all of those shares based on the weighted asset class benchmark. All right. Our report is now done. And here we go. Holding scan, you'll see your logo here. That's because we can white label this. Test portfolio 1012. You'll notice that is the report title that I gave it in in tab number 1. We have our macro allocation, subcategory, which is what I had chosen. This shows essentially the benchmark category itself. We have our trailing performance from 12/17/2015. That's our common asset inception date, which is the default that I chose. And then we have our risk versus return. We have standard deviation versus return. And you'll notice that either down or to the right of any graph that we have will be a chart showing the information on that graph. We have our best and worst case analysis, the best 3 years, 1 year, and 3 year periods for the portfolio. Equity properties for equities, fixed income properties for any bond or mutual fund subsections or ETF funds subsections that would be fixed income. And then our overall portfolio metrics, our 12-month yield, our average expense, our average turnover, top 10 equity sectors for the portfolio, top 10 equity countries, and then what I consider to be our greatest value add, our top 10 equity holdings, which essentially shows the true measure of diversification of this portfolio. You'll notice for Apple, this is a perfect example. We have Apple stock at 28.57% of the overall portfolio. We own that stock. So we actually have 100% of the holdings of the 28.57%. Now, the way that this is set up, you'll see that our overall exposure is 28.92%. Most of that is comprised of our holdings of the actual core, but there are some subsections in mutual funds. For the Harding Lever mutual fund, 1.57% of that mutual fund is Apple. Based on the allocation of this mutual fund in our portfolio, we can say that 0.3% of the overall portfolio is the Apple found in Harding Lever mutual fund. The same goes for T. Rowe Price. We have 1.09% of RPIGX is Apple, and based on the allocation of RPIGX, 0.05% of the overall portfolio is the Apple found in this particular mutual fund. And as we go forward, we can look at individual investments. If we invested $12,000 on this date, our final amount would be $17,593, provided we have a 1% annual fee. And then we have our large cap growth and multi-cap value benchmarks just underneath. Overall non-adjusted returns here. This shows the 1, 5, and 10 year for each individual asset, even if it goes back further than the portfolio itself. And then we have the information that's actually pulled on the report. For some assets, if we had gone back before its starting date, you might see a small indentation here with the benchmark listed with it. For example, in this particular case, if we were going to, if we'd gone back before Goodyear Tire was started on 4/4/1983, we would end up picking up the Lipper multi-cap value. In this particular case, the bold is the benchmark, and the asset underneath is what's tied to that particular benchmark. In this particular case, Apple and Facebook are tied to the same benchmark, and then these two mutual funds are tied to the Lipper Global Multi-Cap Growth as well. And as we move forward, we have some standardized returns and after-tax returns on distribution. This is information that comes to us from our data providers. We have a glossary of terms for our index definition, and then we get into our disclosures and our glossary. And that's our most common report. You'll see other reports that have different subsections. For example, our Comparative Scan is essentially a holding scan, which would be comparable to the Morningstar X-ray report. You can run these side by side. In order to get that, you simply check the box there, and you choose which portfolio you wish to compare it to. You can compare it to an asset, you can compare it to a model, or you can compare it to an individual asset as well. But as far as the system goes, those are the basics. Any questions that you might have, please feel free to contact Advisory World Support at support@advisoryworld.com or reach out to your CFRA agent. Thank you very much and have a good day.